Now moving back to the Policy Transaction tab. We initially bypassed the Policy Transaction tab because the risk relationship, coverage, and the policy transactions are all tied together in the Policy Transaction tab as activities occur. A policy transaction is a transaction that ties a coverage to a policy and potentially a risk. Normally it has a premium associated with it, but it is not necessary. You can send a $0 transaction in order to have a coverage appear. We're expecting to see a coverage and we are expecting to see a risk. But let's say that it's something like terrorism, where it is a policy level coverage, but it is not specific to a risk. You would send a coverage code, but you would send a negative one for the primary risk because it doesn't apply to any specific risk. Same thing if you have a transaction that is a tax or a policy fee. You would send a negative one for the primary risk and a negative one for the coverage because it doesn't apply to a specific risk or a specific coverage. It is a policy level tax or policy level fee, so we keep it at that level. Negative ones are used because we don't want to infer missing value as having a meaning. This could cause trouble if something happened on your extract and some of the data got truncated. Without a negative one, we might misinterpret this. On the Policy Transaction tab, again we have the same headers, row 9 to 11. In row 12, we see the Policy Transaction Unique ID, a value that uniquely identifies each policy transaction from your source systems. This can be just a generated number. In rows 13 to 15, we have the Policy Unique ID, the Primary Risk Unique ID, and the Secondary Risk Unique ID. You probably won't use the Secondary Risk ID, however, we do ask that you send a negative one if you are not using it. Rows 16 and 17 cover the risk relationship and coverage unique IDs. Continuing down the Policy Transaction tab, in row 18 we have the transaction date and in row 19 the policy transaction sequence to order the transactions. Row 20 covers the accounting or book date, telling us when it was actually booked for accounting purposes. In row 21, we have the transaction effective date. The key here is, if it is a new business transaction, this would be the policy effective date. If it's an endorsement, this would be the effective date of the endorsement. If it is a cancellation, this would be the effective date of the cancellation. Continuing down the Policy Transaction tab, in row 22 is the transaction earnings type. The transaction earnings type, if sent as a yes, tells Foresight BI this is a normal transaction, meaning earn it like a premium. If no is sent, it tells us to not earn this at all. Maybe it is a policy fee or a surcharge. If an O is sent, it tells Foresight BI this is only for earnings. The O code is used when you are going to send your own earned premium numbers and thus tells Foresight BI don't do anything else, meaning don't count it in written premium or gross premium or anything else. This is just for earnings. As to earning methods and procedures, normally Foresight BI will calculate the earned premiums at the coverage level using the daily method. We also have the 1/24ths method as an option if you use this earning method. The default is the daily method and it can be used to calculate your loss ratio down to an individual coverage, form, or endorsement level. A policy fee would come through as a transaction and it would have a -1 for the coverage and a -1 for the primary risk because it's not associated with either. For earnings purposes, you tell us whether the policy fee gets earned or not. Most companies don't earn policy fees. If this is your procedure, you would send an N for the earnings. In rows 23 and 24, we have an earn from date and an earn to date, which you can pretty much disregard. These are typically used if you don't use standard earnings periods. Some companies, depending on the line of business, may have a perpetual policy, meaning it is in force until canceled. There is no expiration date. In this case, they would do annual audits and then have an earnings period that is for a year. Thus, they specify the earned from and the earned to dates since they don't have an expiration date. Most often, you won't need to worry about this. Continuing down the Policy Transaction tab to rows 25 and 26, the Transaction Type Code and the Transaction Type Subcode come from the Status and Transaction Type spreadsheet, which we will cover in a separate video. Row 27, Percentage Earned on Inception, would generally be blank unless the policy is partially or fully earned at inception. Next, in row 28, we have the transaction amount. This would be the premium or tax on your policy fee. If you have commission on this transaction, you can include it here in row 29. Otherwise, you can send it through a separate commission transaction. Some systems have a commission tied to the different coverages and have it broken out that way. Other systems don't. You can send commission amounts in two ways. You can send it in the row here, or you can send it in a separate transaction for the commission amount. In row 30, we also allow for the term amount. The term amount is the full term premium amount. If you did an endorsement mid-term, the amount in row 28 would be the prorated amount. The term amount in row 30 would be the full amount if it were for the entire policy period. The reason for this is if you do a renewal report, you can see exactly how much it would be if it were renewed at current rates. Thus, if you do some forward-looking projections, rather than having Foresight BI tell you what the prorated written premium is at renewal, we could tell you what the full term premium would be.